in advance is a liability. It sounds weird because in our heads we are thinking, oh, but I have already paid, received it, so it's a good thing. Yes, it's a good thing, but it's not part of this year's income. It's part of next year's income. So that's why I subtract it. And I make it a liability because I now owe the person either the money back or the service. You see? So I'm in debt. So if the guy paid me rent in advance, it's good for my cash, but now I owe him a month's rent. I can either pay it back to him or I give him the place that he's renting for that month. I still owe him that service. That's why it's a liability. Okay. Does that make sense? So always remember, you have receivables and you have payables. Now please, this is the one thing I always test. So make sure you know this. So receivables is the debtor's control, payables is the creditor's control. Receivables is the accrued income, payables is the accrued expense. And now this is the one that you guys get confused with. Receivables is the prepaid expense. And payables is the income received in advance. Can you see both the receivable and the payable has got an income and an expense in there? Can you see? So this is something you need to study. Okay? Because your first thought is always that income goes with receivable. Yes. Huh? Income received in advance. You're not allowed to write it like that. I'm just writing it here like this as a summary for you. Okay. So now let's go look. They give you rent income 3,900. So I have a balance 3,900. And this basically means that up to date 28 February 26, I have already received 3,900 for rent. Now they give me an adjustment. They say rent is 300 per month for the financial year. So I can now do it two ways. First way, I can go calculate my profit and loss. That's the first way. How do I do that? I know I want to show the full year and it costs 300 Rand per month. Can you see it's going to work out 3,600. Now I can more see if I balance, I short 300. I received more than the income for this year. So this would be my income received in advance. And there it goes. And because it's on the credit side in the balance sheet section, it means it's a liability. That's my first method. The second method, I could have said, okay, I have 3,900. I know it's 300 Rand a month. So it means I received 13 months. How many months am I supposed to receive? 12. So 1 month was received in advance. Can you see the two different methods? Yes. I'm not going to ask you T accounts. The T accounts I just do now to explain the concepts for you. So if you want to use T accounts, because then you're going to use it as a calculation. So you're literally going to say rent income, income received in advance. This is 39, this is 300, so this is 300. You're going to do it like this for yourself as a calculation. Okay. But I'm not going to ask it for you formal T's. So now, if I go here to my post-adjustment trial balance, I have income received in advance 300, and I have rent income 3,600. Can you see it adds up to the 39? So in the income statement, I'll have the rent income 3,006. In the balance sheet, I'm going to go to payables, which is a current liability, and it would be the 300.